Hey guys, I wanted to share with you guys today like something that I'm calling Bell Capital versus Wall Street. Like, why is Victor Bell going up against Wall Street? Banks, institutions, the big players. And this really started on my own personal journey, right? Look, so I always take a look at big properties. I've always wanted big real estate. I'm a real estate guy. I've been doing deals with just me and a couple of my buddies, but it was like I can never get that scale, right? Because you really only do this if you're going to scale in real estate, all right? So when I started doing the research, let me kind of go from here and I'll write this down. So we have Bell Capital. I'll just write Bell Cap versus Wall Street. That's Wall Street. Now, Wall Street's really always going to be tied to the stock market. If you watch CNBC, you watch Fox News, all this stuff, there's a lot of stuff happening in like the stock market, the market of stocks, Wall Street. So, but for me, I'm like, dude, how do we play this game? How does the little guy play this game? And here's what I want to kind of point out to you guys, why I said it's me against them. When I started Bell Capital, and I'm like, okay, we're going to start a fund. Started a $50 million fund. The cost to be able to just do the paperwork was like 25,000. That's not including the investor portal, my office, people that we pay, research, development, brokers, assistants, consultants, all of that stuff. That is not included. That's a part of the business. But starting that fund, there's a cost to start the fund. And when you start a fund, right, you have to register with the state, you got to register with the SEC, you got to get a securities attorney to draft the right documents, which we have, right? So there's a part behind this. In order for you to be able to invest, you got to be an accredited investor. What that basically means, based on the SEC requirements to say, yes, I'm accredited, meaning I know what I'm doing, which most people don't. I know what I'm doing because you need to be able to have this accreditation. They're saying, hey, you need to make $200,000 a year or you have $1 million in net worth. That's basically what they're saying. Now, that's not a lot of people. Now, if you have a business or a company or something like that, then naturally that, but for an individual, that's very difficult to do. So therefore, the deals that you should be able to get access to, the deals that you need, my mom, my dad, my sister, my buddies who own companies, my friends that own restaurants around here, people who own construction companies, HVAC, my buddy Johnny that owns a painting company, a commercial painting company for apartment buildings. Like normally they don't even hear about these opportunities. Why? Because typically Wall Street or Wall Street companies like investment banks, bankers, private equity firms, hedge funds, they go after deals, but they aren't calling the little guy. Because here's the thing. We all hear this stuff, and I used to hear it too. It's called high net worth. Some people say individuals, whatever, but it's high net worth individuals. But the deals that we're looking at, they're not high net worth individuals. They're wealthy companies that own these deals, right? They're the Blackstones, BlackRock, KKR, Equity Residential, TA. Who are some of the other big ones? True America, MAA, Graystar, Starwood Capital. These are the players. They aren't going to any retail investors to do this. The way that that's done, which is why I said we're competing against them, with Bell Capital, and giving the everyday little guy access to the same deals these guys buy. That's my goal. That's my purpose, right? So it's what they'll do is let's say, for example, we have Blackstone. I'm not picking on them, but they're the big player on the block. So let's say they go after a deal. This is an apartment deal. Let's say this is a 200 units, right? This is 200 unit deal. When they buy this deal, what happens is they're going to buy this deal. They're going to turn it into what's called a REIT, right? Then they're going to let the little guy in, little guy. But when you guys invest in this deal, this is a stock. This is BLX. You're not getting any access to the real estate. They own the real estate. You're just getting shares. You're getting dividends. You don't own any real estate whatsoever, right? You don't get the tax benefits of owning the real estate. You don't get a K1. You don't get all the benefits of being a player. That's the way this game is always done. They've always locked the little guy out. One, they made it cost prohibitive. So in order for me to set my company up, that's 25,000. Later when I do a non-accredited fund, which is a whole different thing. I've done videos on that. That's going to cost anywhere from 300,000 to $500,000 and 12 months of preparation to just get this done. A lot of auditing, a lot of butt probing where they want to see everything. And I'm going to give it to them because I want to help. But the problem is this. If someone doesn't step up to do it, it's not going to get done. And the people who are stepping up to do it are going to the other guys. Here's who typically, if you have a fund like mine, I know a lot of guys who have real estate funds. I know a lot of guys who have debt funds and equity funds. All right. Here's where they go to get their money, right? They're going to go to this is the typical place most people who run a real estate fund, this is where they go to get their money. So you see all these people out there doing stuff. They're not going to you and me. They're not going to Aunt Myrtle. They're not going to Catherine. They're not going to Sharon. They're not going to the victors of the world. They're going to pension funds. This is where all the top players get their real estate, get their money from. This is where they go to get money. They go to pension funds, like let's say CalPERS. They go to a CalPERS. They go to Lifeco, life insurance company. It'll be like Guardian. Like I know a buddy of mine's, they own 60,000 units. Their first investors was Guardian. They still use Guardian. It's one of their main people. They go to sovereign funds. They go to sovereign. I think that's spelled right. Sovereign. Yeah, whatever. They go to sovereign funds, right? These are these are wealth giants, right? These are governments that they're going to. They're not going to the little guy like me and you. Oh, another one they go to, endowments. Let me give you an example. So Harvard Endowment, $50 billion. Dollars. Life insurance companies. I want to say just Prudential by itself is one of the largest real estate holders on the planet. I want to say it was like something trillion. CalPERS, they are $500 billion. Dollars. And if we want to drop some other big names in here, we'll BlackRock. We'll do BlackRock. They're at $13 trillion. Dollars. What do we say? Endowment. This one's 50 billion. This one's 1 trillion. This is 500 billion. For this is a pension fund for California. If we just did, you guys, a lot of you guys invest in Vanguard. You guys have your money at Vanguard and Fidelity. We'll just pick Vanguard, the other big one. Vanguard, right? That's $10 trillion. I think they're up to 11 right now. So you got all of these giant players, and then there's Bell Capital. Boom. We're going after the same deals they buy. Right now, we have a $50 million fund. We're continuing to raise for that. We have a Zoom that's coming up tomorrow, as well as we're doing an office briefing for our investors that are interested in investing with us, seeing how this works. That looks terrible, right? And then we're also doing an end of the month. It's an investor only meet and greet where you get to meet me and we get to go over a couple of things. And also, I'm going to be bringing some people that are on my team. So these are the reason why I'm bringing this up because like Wall Street doesn't want to compete with my company. They want to keep your money to themselves. They want your money to continue to be able to funnel through Vanguard, Fidelity, retirement accounts, mutual funds, money market accounts, and keep your money tethered to the stock market in Wall Street and cut the little guy out. That has been that way for hundreds of years. A lot of times they don't want to do it. If you're called a retail investor, which you guys mostly know that because you're investors. But that's typically all you're sold the dream. Buy a home, invest your money in a retirement savings account, don't touch it, leave it there, and it'll be there. Get a loan, get some credit cards, get a car loan. All of those are products, man. Those are all debt instruments for Wall Street that they bundle up, package them, and sell to the market, and then later they'll go off. Even if you bought T-bills, T-bills are they're still a product. They're not real estate. So my goal is to be able to help the little guy. I always have. That's I've always wanted to face the giants. I hate bullies. I've always like, hey, why can't we get picked? And then I always want to go put that group of people together, and then together, when we put all our money together, we can go win, right? So if you guys want to invest with us at Bell Capital, same deals that Blackstone's buying, Equity Residential's buying, JP Morgan's buying, Goldman Sachs are partners in some of the deals that we are looking at to buy. But rather than me go to them and partner with them, they don't need the money. Your family does, right? The wealthy companies don't need any more of these assets. But if we all put our money together as a group and we invest, I'll find the deals, fund the deals, manage the deals, send cash flow to you guys while we get paid on a double and make our money to later turn around and take our portfolio to Wall Street, to a Blackstone or a BlackRock, to one of these big behemoths who are never going to run out of money. And then we score instead of Wall Street constantly scoring against us. All right. That's valuable, man. It really is. And I wanted to share that. This is something that's near and dear to me. I'm doing this. I'm gonna keep doing this. This is why I believe Wall Street makes it really hard for the little guy to play this game. But I want to open this up to everybody. I want to open it up to one, good people, not everybody. Everybody's not gonna invest with me. If you're a person who every time you do something it turns to shit, don't invest with me. If you have a bad attitude, don't invest with me. If you can't invest long term, don't invest with me. But if you got a great attitude, you love real estate, you're patient, you think long term, you have a long term horizon, 10, 20 years, you want to build wealth and you have a great attitude and you want to be with a group of people who are going to grow as an investment community, investing in my company, Bell Capital, I want to talk to you. So reach out to me. You can go to bell-capital.com. You can schedule a call. We can talk about your investment problems, challenges, what your thoughts are. We can go over how it works, what our fees are, where the deals are going to be, what type of properties, which I do all the time, or you can reach out to me directly. Like I said, leave it in the comments. Go to bell-capital.com as the website, or you can shoot me a text. You can go to 760-531-8500. Just text info and one of the people on my team will get back to you right away. All right. So if you need anything, let me know. But that's why I'm doing this. I want to compete against Wall Street. I believe we, the everyday investor, you, the little guy, we can actually win. But we got to kind of see this for what it is. This is a game and you got to come to win. And I want to do it with you guys instead of them. All right. That rhymed. Anyways, let me know if you guys need anything. Let's get after it today. Like it, share it, comment it, do your thing. Let's go. Boom.